Yes, we are.
All right, good evening and welcome to what I believe is the first formal meeting of 2025, which I'm assuming I've got that right, so here we are. So today is January 2nd, it is 6 o'clock, and we're going to open up the Finance Committee meeting. And we'll start with, I guess, quick intros. I am Larry Clausen.
Ed Smith.
Earl Mason.
Carolyn Scafidi.
Okay, and are we gonna?
And I'll open up the meeting for the Capital Asset Management Committee. I'm Ron Schneider. I'm chairing this meeting for the Capital Asset Committee. We'll do a roll call.
I'm Eric Eldridge from the Select Board.
Thank you.
And Earl Mason, part of the Capital Asset Committee.
And Colin Wazell, Town Manager.
Catherine Foster, Assistant Town Manager.
All right, we're all here.
Okay, so meeting's open. Public comments are first on the agenda, and seeing that there is no, or I guess are no public here, then we'll move on to meeting minutes. Can I get a motion to approve minutes for October 8th, 2024?
So moved.
Second.
Second. Okay, all in favor of approving the minutes, please say aye.
Aye.
Opposed? Abstained? Minutes are approved. And moving right along, we will start the joint meeting with Capital Assets and talk about the funding for FY26 capital plan. With that, I'll turn us over to Colin.
Kat is going to actually
Kat,
take this
okay.
one.
All right. So the intention of this initial meeting with Capital Asset is to discuss the funding options for the FY26 capital plan. Screen. So this is the FY26 Capital Asset Management Committee timeline. At this point, administration has received and reviewed department requests for the 5-year capital plan. We had initial meetings with everyone so far. The town manager and I are still meeting with departments to get a better sense of the urgency of these requests and how some of these requests can be integrated as part of the operating budget. So at the next meeting with finance, we hope that Capital Asset will have the recommended budget at that point. Quickly. Alright. So prior to the ARPA funding, the town primarily used a mixture of borrowing free cash to fund our capital improvement plan. We knew this was coming where we would no longer have ARPA. So now we're moving back to just utilizing free cash and debt, but really building a 5-year plan with the additional consideration for the debt impact of the new middle school. For the FY26 plan, we're expecting to fund up to $1.2 million in capital projects, and this will include the fire pumper that was approved at fall town meeting for up to $900,000. That being said, so we'll have $400,000 in free cash, and then the $900,000 in non-exempt debt, which was reserved for the fire pumper.
Will that fire pump, won't that go in fiscal 25? It'll be funded in 25? No?
No,
How does that work?
Yeah, that's a great question. We specifically structured it using what they call a long coupon because it wasn't an expense that we typically, if you do borrowing, we would know going into the budget development process that we'll have a debt service payment on it,
Okay.
and we would include it. Here, because we didn't know that going into the fiscal 25 budget, and because we're doing a short-term note on it, it's just as easy for us to do a long coupon. So we'll experience the first interest payment on it in fiscal year 26. And that's reflected in the budget that you'll see after this presentation.
Okay, thank you.
With that being said, we did receive a total of about $1.7 million worth of requests for FY26. So a couple of things to point out is that we're really trying to take a hard reset of how we plan and fund our capital program. Really looking at some of these looking in the long term at some of these larger capital items that we need to fund. With that being said, we also need to acknowledge that we may need to save our borrowing capacity for that, and especially as we have discussions about the new public safety facilities. alongside the debt of the middle school. So there's a lot of unknowns, so we're trying to be conservative, and that's the approach that we're gonna take with this, at least the FY '26 capital plan. So Colin and I've had some discussions, and we're gonna have further discussions with capital asset, but we are leaning towards suggesting that we don't borrow anything additional than the 900,000 that was approved at special town meeting, and then allocating about 400,000 free cash to fund the FY '26 projects. So we have a lot of refining to do at this point with department heads, because obviously about $1.7 million request, and only including the 900,000 for the pumper, we only have 400,000 to play with.
Is that free cash as of year end or forecast, and is that the total free cash or a portion of free cash?
A very narrow portion of it. I don't wanna jinx myself, but
Yeah.
I expect that the free cash that gets certified for us to use in fiscal '26 is gonna be closer to $2 million. Generally, it's in the 1.4 to 2 million. This is historically higher than what we funded in the past, and granted, like Kat said, we're coming off of a very unique 4 years where we had this $3.7 million from the federal government that we almost entirely dedicated to capital. But in years past, we would spend between $300,000 and $350,000.
So talking
in free cash.
4 out of 2 potential, okay.
Correct.
Okay.
And if I could just have one note on the non-exempt debt, we just this past week signed an agreement for the fire truck. We're actually borrowing only $720,000 for it. The authorization was up to $900,000, but the way these authorizations work, it's not like we have the authorization to borrow $900,000. You had up to $900,000 for a very specific purpose, which was the fire engine. In a worst case scenario, the town could choose to seek additional town meeting appropriation to use that balance, $180,000 if we wanted to. Again, Kat talked about the potential of a new public safety facility, either police or fire. On top of that, one of the things that, as a part of our conversation about really refining the capital plan, I know Capital has talked about this, we have a history in Tyngsborough, and it's not unique to Tyngsborough, but we've done it here, of letting smaller operating budget items pile up and creating a combined request that now all of a sudden is eligible for the second pot of money, i.e. capital. 4 years ago or so, we noticed that with our police vehicles, those have to be replaced at a much more regular frequency than, say, a dump truck in the highway department. So instead of letting one $20,000 lease compound into 2 or 3, which now makes it eligible for capital, we've been funding that directly out of the operating budget. So we include lease payments in the operating budget. Some of the requests that we saw in fiscal '26 and even moving into fiscal '27 are things like that that really should be taken on a smaller level as a part of the operating budget. But times are tough, and so department heads get creative and let a lot of that pile up. It's just not a sustainable approach, and so that's why fiscal '26 has the potential, depending on where this irons out and how this committee, capital, and the select board feel, to be sort of a reset year where we're really able to refocus on those larger capital items, knowing that the advantage we have from ARPA is gone, and we're gonna be spending either free cash, which will reduce our ability to spend on other things like stabilization, or borrowing. And while we are certainly well below the maximum borrowing limit that our own financial policies require, that doesn't mean that we should spend up to it. And as a reminder, it's not like we're borrowing free money. Anything we borrow, to Earl's point earlier, I've now got to find that in the operating budget to pay the debt service for. So I think Kat and I, based on the results of this meeting, will have a much more refined presentation. But ultimately, I think what you'll see, the $720 is spent for the fire pumper. I don't believe that I'll recommend that we use the additional appropriation, again, which would require a new town meeting vote. I think that we'll be looking at spending that $400,000 in free cash on truly essential items, and then we'll have a much more concrete plan for fiscal '27, '8, '9, and '30.
To be clear, so it says 1.2 million, but you've got 1.3 million below. There's the 400,000 and then 900,000 in non-exempt. My guess is that we made the switch because it used to be 300 in free cash. That's what we had been doing.
Yes.
And so it's really 1.3 million, but we're really only going to spend about a little over 1.1.
Right.
Yes.
Okay.
7 and the 4, is that what you got?
Yeah, the 720
Right.
plus the
Okay.
400,000 in free cash, give or take. And I'm good with that. The, the other thing that we need to look at is stabilization accounts, because we have capital asset stabilization, which we're not advocating that we pull from at this point. In fact, we probably wanna see whether we can actually put more into there, because we have bigger ticket capital items that will be coming down the pike, and we need to soften the blow of some of those. We also have debt coming off, so there's the 2.9 or 2.8, whatever, I don't know what the middle school is going to be. That's gonna come on, then the elementary school comes off too in fiscal '26, right?
Yeah, I don't wanna confuse the two, cause that wouldn't be the same borrowing that we would be doing for
Correct.
this. But you're correct, and there's a slide that we'll go through later, on that. The middle school will be 2.9, but you're right, this is the first year that will be our only exempt debt. The boiler and roof, which were previously exempt debt, do roll off. Our total, assuming we don't make any changes to my and Kat's anticipation that there's no additional borrowing, but including the fire truck debt service in fiscal '26, the principal debt payments that we'll make from the general fund, excluding the middle school, which is exempt, is $495,000. And then the interest is just shy of $100,000, and that includes the fire truck. So anything we borrow on top of that, we'll obviously have to factor into and these are, I was going to pull up the list of everything, but it's such a large spreadsheet, you won't see it here. This is probably 2 or 3 dozen smaller items, because again, prior to the last 3 years, we were doing borrowing for most of our capital plan.
Hey Carl, just for my education, can you just tell me exempt versus non-exempt debt?
Yes.
Just for me, I don't.
Absolutely, no, that's a good point. Exempt debt is things like the middle school, things that we're billing taxpayers on top of their regular tax bill. So you do a debt exclusion vote, it requires a vote of town meeting and an election. Those are for your much larger things like an $84 million middle school. Non-exempt debt is the debt that's included in the general fund. So taxpayers are still paying it, but it's included in our Prop 2.5 levy
Got it.
limit.
Okay.
Those are your smaller items, and that's what we would be borrowing for
Got it.
any capital projects.
Got it, thanks.
And I like the conservative approach for the $400,000 in free cash to plan for, to say, okay, let's see if we can fit those items in there. I know you guys are doing it, but it's, let's just make sure that we're not pushing something off till next year and run into another scenario where we got a mid-year thing like the fire truck.
Mhm.
That's all. I mean, I know that we're doing that, and
Yeah.
I've seen some of the items, and I'm confident that we'll have that.
So kind of the target is taking that 1.7 down to 1.1 somewhere to close that gap, right? We're trying to close a gap from 1.1 to 1.7,
Yeah, the
right? Gonna have
in that
26.
26, is that the 720, is the 720 or the
Yeah,
900 in the pumper truck?
It's
That's
in there.
Correct.
yeah. Okay,
Right, that's exactly.
that's the gap we're trying to close.
Most of the other requests, small ticket items.
Yeah, I think, well, not really small.
Well,
Certainly
I mean,
not as
they're
big
not
as the fire.
$900,000.
Yeah, you're talking about $100,000, $150,000, $200,000.
Tobacco.
And I want to be clear, and we made this clear in meetings, we're not saying that these items aren't necessities. They're just probably more appropriate to be funded over time in the operating budget, or delayed till fiscal '27, and we'll talk about the budget forecast in the second part of your meeting. That all kind of plays into what we should or shouldn't do, and we've all mentioned it, this is the first year of the town's $1 million contribution toward the middle school exempt debt. We've got a budget that works with that, but it means that everything else is very tight. And so as much cushion as we can give ourselves is going to be better, and unfortunately that means being more meticulous on our process than, again, because we had $3.7 million that had to be spent from the federal government, we had a few years where it was just a tad bit easier, but.
Or wasn't the federal government, some of the taxpayers.
Correct.
Through the federal government.
Yes.
Right.
Better word.
Which to me was the biggest state of government, that's another story.
So from a guidance standpoint, do you have what you need from us? Because
yeah, I mean, unless anybody on the finance committee vehemently disagrees with that approach, you will, after this meeting, Kat and I will sit down with the rest of the departments, and there'll be a second joint meeting of both boards to present the actual individual requests for your feedback and questions.
No,
We
it's
wanted to make
capital-
sure we knew what we were dealing with in terms of dollar
Capital
amounts.
asset has that, those lists, right, that,
Correct.
your priority list, 1, 2, 3, 4, 5, all that.
And that's already been scrubbed once or twice already, right, from I think the initial meeting we had, it's already been scrubbed, so, okay. Good.
Okay. Easy enough.
It's gonna be a challenge.
Alright. Do you wanna adjourn the meeting, or just stick around, or you?
We can
I'll stick around. I wanna see the full budget presentation.
Well, you'll see a much more
We
full
can
I
version.
know.
we can adjourn our meeting and still stick around and.
Yep. If you would like to.
I would.
I move to adjourn capital asset.
I second that. Earl, you have any problem?
Aye, I'm in favor.
Good.
Aye.
Aye. We are adjourned as a capital asset
That's
committee.
Yep.
Good night, guys.
Alright. Then I will dive into the budget presentation. So this, as I indicated in all of my correspondence with you, is just to set the stage for the fiscal 26 budget. On Monday, I will present a first attempt at a balanced budget to the select board. And then, of course, we have subsequent meetings already scheduled to dive deeper. But going into that, I wanted the finance committee to be aware sort of the environment that we're operating in, because fiscal 26 is a unique year. This slide doesn't really change, but Tyngsborough has a very strong tradition of extremely conservative budgeting. We, every year, as long as I've been here, ask departments to provide their budget based on level funding. Obviously, there are some aspects of that increase, so it's really level service, because the cost of labor goes up, the cost of utilities, obviously. And then we say if there are new things that your department needs, be it positions, new equipment that would be in the operating budget, send us a separate memo, and we have a more detailed process for vetting those requests. At the same time, we spend the first 6 months of the fiscal year every single 2 weeks reviewing data on our revenue trends to make sure that we have a good idea of where the revenue will land. It always lands better than we budget because we take a conservative approach, and anything that we collect and don't spend over what we budgeted for becomes part of that free cash, which helps us with capital, helps us with our stabilizations, and creates a little bit of a cushion. Every year we're starting the budget process a little bit early. This year we did it 2 weeks early, and so departments had their requests into us by December 10th. And in the weeks following that, we met multiple times with each department to refine their requests. Again, it's relatively easy because our departments are largely just providing level service. So on the expense side, fiscal 26 is slightly easier in that all but one of our collective bargaining agreements is settled. Going into fiscal 25, all of them except for one were expiring, so we had a lot of uncertainty around where those contracts would land. That's why in October we had 2 funding articles to fund the balance of labor costs for our police and dispatch union. So I'm very comfortable with the fact that we will settle the one remaining contract before town meeting. The budget that I'll present to the select board on Monday already assumes a comparable increase that our other units saw, so it's a little bit easier because we settled the other 6 contracts all at the same place, basically. So that's kind of the numbers that we used for this. There are other language items that may drive costs in different directions, but for the most part, I feel comfortable with where we're landing on labor. So that makes it a lot easier. The other really easy piece is that the school department is in the final year of their agreed upon 2.7% increase. 5 years ago when the town, or almost 5 years ago when the town agreed to contribute $1 million from the operating budget to the middle school debt, part of that agreement was that the schools for the first 5 years would limit their budget increases to 2.7. That's very helpful because going into this, they can take their time doing their budget. How they allocate the 2.7 is not really my concern right now. We know what the number will be. It's worked very, very well, and my hope is that at the first tri-board meeting in February, we'll have a conversation with the school committee about setting another set increase for 5 years. I don't expect it'll be 2.7, but it's very helpful for our planning purposes, and I think for theirs as well, for us to say, over the next 5 years, these are the increases. We are expecting, as is every other employer or municipality, higher than previous increases in health insurance. We saw retiree insurance go up quite dramatically, albeit they didn't see any increases for the last 5 years, so it was kind of a correction. Every year, our insurance company, we're part of a collective, it's a trust, and so we do much better because we're one of the smaller communities in the trust. They always say to budget for 10%. We always budget for 10%. I think last year we landed at just shy of 5%. I don't expect that picture to be as pretty this year. I think that will be probably more in the 7.5%. But we won't know that number for certain until the end of January. They announce it at the annual business meeting, which is January 25th. So the budget that I have for the select board includes a 10% increase because I'd rather be safe than not. And the $1 million contribution to the middle school debt, the structure of that is that $900,000 is coming directly off the general fund, and you'll see that in future slides. $100,000 is coming from the Lakeview Ave lease. We leased the building that used to host our elementary school, and the school department, again, as part of that larger agreement for the $1 million, agreed that they would kick in $100,000 from that lease revenue every year to help offset it. So it's $1 million. Taxpayers will only be billed for the debt service minus $1 million, which is in a future slide.
Who did we lease that to?
The Valley Collaborative. They've been there for at least 15 years, and I think they're
Okay.
only a few years into another 10 or 15 year lease. And it works well for the town. I mean, they cover most of the capital expenses.
Yeah,
They pay for the custodial staff over there, so it works and the building
Good.
gets used.
good.
On the revenue side, some categories are trending very well, higher than budgeted. Earnings on investment are doing well, and we expect that will continue into fiscal year 26. One of the things that set us back slightly in our planning is that as a part of this whole $1 million contribution, we said that we were gonna put $1 million from the new growth of the Toll Brothers into the debt. And we will certainly realize $1 million in new growth, but we're not realizing it as quickly as I think we thought we would 3 or 4 years ago. They still haven't sold, I think, 16 or 17 of the units, and it only counts on our new growth once they get an occupancy permit. So you gotta figure they're probably still actively building 7, maybe 8. 4 or 5 of those may be fully complete by June 30th, which is the deadline for us to capture the new growth. So instead of the $1 million from the Toll Brothers, we're likely going to be in the $700,000 to $800,000 range total, and that reflects our standard new growth. Anytime someone builds an addition, or builds a new house, smaller projects. We also aren't seeing some of the larger projects we were hoping to move forward either at all or as quickly as we anticipated. There's a permitted warehouse project on Middlesex Road, which is far behind the plans that they originally had. The warehouse on Kendall Road, which you can see if you drive by the construction of the driveway, that is not going to be completed this fiscal year. So there's a few factors going into it. We're also getting closer and closer to being built out as it comes to these large projects. So this will be a recurring kind of guessing game. But the bottom line is, even at the $700,000 to $800,000 in new growth, we're able to meet the $1 million contribution that we promised taxpayers. So again, we start this usually in August, looking at how we closed the fiscal year before, and then every month moving forward, we look to see where we're at. We look at 5-year trends. We talk to the Economic Development Office and the Building Commissioner. That's how we get the data on Toll Brothers progress, for instance, some of these industrial projects that are being built out, and our assessor's office. Ultimately, the assessor's office tells us what they're comfortable with in terms of assuming new growth. So every time I see our chief assessor, I remind her that the new growth number is 800,000. It's possible that they're not comfortable with that and we have to roll back to 750 or 700, which is why in the presentation I'll give the select board on Monday, there's a bunch of different scenarios, because I won't know that until we get closer into the budget. We look at trends. We try to identify outliers. Not everything works perfectly in our trending. We're halfway through the year, and so we try to forecast out, but some of the stuff is funny about timing. Motor vehicle excise largely gets billed in a large group, but then as you buy new cars, they send correction bills. Same thing with the cannabis revenue. The state collects their money on time, make no mistake, and sometimes they're delayed in sending the payments to the town. So we never have a perfect idea, but by doing it conservatively, we always underpromise and overdeliver.
What's the timeline on the second one opening?
They should open any day now. Their construction is complete, they have an occupancy permit, they've got their permit to tie in, they're just waiting on their final license from the Cannabis Control Commission. And once the new cannabis facility opens, I expect we'll see a small bump because it'll be new and people will be comparing. But eventually, over the course of middle of fiscal year next year, it's gonna level out because they'll be competing for kind of the same folks. We're still trending very positively on cannabis, and part of that is a great thing for the budget. It's also become a bit of a headache if you drive down Middlesex Road, but
Yeah.
it is helpful. And so that's why, so we play a lot of guessing games. Now, the other piece is that we are guaranteed, and in the select board meeting, they'll have a trend chart that shows that we're slightly behind on real estate tax. We don't take that into consideration because that's money we're entitled to. It could be delays in getting the payment from a bank if your money's in escrow. So that always levels out. One of the things that we're doing very well on is licenses and permits. That's again tied to the increase in applications over at Toll Brothers as the value of their projects are going higher. The building permit fees are higher, and last year the select board increased for the first time in almost 10 years the building permit fees. Now, it's a great problem to have because it will continue into fiscal 26 as they finish out the project. But obviously, once the Toll Brothers project is complete, we won't see building of that scale anytime soon until one of these larger projects come online. So that will level back out to what we're more used to, which is like in the 850,000. Right now, we're trending to be over 1.3 million, which is fantastic. We are falling slightly short right now in marijuana revenue. Again, it's hard to say because the state is delayed 1 quarter on making their payments. So hypothetically speaking, if we're halfway through the year, we should have received 2 payments from them. We haven't. I think that will level out. It won't be an issue. And again, I expect that Yellow House will open any day now. So overall, we'll probably land somewhere in $675,000 higher than we budgeted. That's very close to where we closed fiscal 24. And this all has to do with the fact that we expect for the worst case scenario, that way we have. And so that will become part of our free cash, which can help with stabilization, paying for capital projects.
So are there other
et cetera.
shortfalls? I think I mentioned this the other
Yeah.
day. So there's $1.5 million in that first bullet,
Yep.
and you get 675 below. So are there other things, are you just trying to hit the big items here? Are there other
Yeah.
shortfalls probably, or variances?
Yes. None that are worth putting on anyone's radar, but yeah, so like for instance, we get reimbursed by Medicare and Medicaid, and that takes ages to accrue. So right now our trend, because it's saying if you're 6 months in and you've only accrued this, we're forecasting out for the second half of the year, it's way behind. So that's probably $250,000
Oh,
behind.
wow, okay.
And then you got some smaller areas that are even harder to predict. Our revenue for property taxes is in one category, but statutorily, the fines that we collect if you pay your bills late is in a separate one. So if people pay their bills on time, we're getting less on the fines. But then also if they pay really late, we're not collecting the fines right away, so those are also down slightly. Again, nothing that is unusual or concerning, but yes, there
Sure.
are certainly some other areas that
Okay.
likely due to timing haven't met.
And that
That's
license and excise, both is 575, just this
Yeah.
happens to be the same number, right? Okay.
Yeah.
Okay, I
Yeah.
thought one of those was off, okay.
No, yeah, they're. I
Okay.
mean, one is probably 573 and one's
Close up, no,
574,
yeah,
but
yeah.
yeah, we round it
Okay.
up. Yeah. All right, we talked about this, how this will continue into fiscal 25. I expect for state aid, again, we won't know that until probably the end of January, what the proposal is, and then we won't know what it really is until after we've adopted our budget. But we're expecting that it will stay the same, and that's the number that we're going with. Last year, the state aid went down slightly, but also our assessment went down slightly, so it was a net positive increase. So we're just assuming worst case scenario that it stays the same, our assessment stays the same, and that's where we'll change it if we need to, but it usually does not for a community like Tyngsborough. I'm not gonna go through all of these slides. I do wanna note that for our revenue forecast right now, the real estate and personal property, which is that top line, that 4.63% increase, that accounts for the 2.5% increase allowed under law, and then what I'm hoping is $800,000 in new growth. Again, that number could come down if the assessor's office isn't comfortable with it. So that 49.9 is where we expect to land.
So it'd be good in that slide just for me, I like totals,
Yeah.
to see what, 49, what was it this
Yes.
year, what was it the year before?
And this is a screenshot of the public sheet you put out. It will have totals once we get to
Good,
the,
good.
yes. All right, so the budget requests. In total, we got $50,112,281 worth of requests. That includes some new positions. Without it, it's 49.9. So we're basically right there. And this includes the contributions to the middle school debt. Again, The budget shows the $900,000 because that $100,000 is gonna come out of something that's not in the general fund, so there's no way for us to show it on the slide. It includes a request for 2 new cruiser leases by the police department. Again, we moved those out of capital and put them into the operating budget. Last year, they had 1 new lease, and then of course the second year of their lease payments. The social media archiving is a request that comes up from the IT department. It would allow us in the future to comply with certain public records laws. We don't need it to comply, so it's likely not gonna make the cut. And then in terms of positions, the police department is seeking a new patrol officer position as well as a records clerk. The records clerk is a repeat. The statutory compliance aspect of public records in police departments has gone exponentially up, and it requires a substantial amount of time. The fire department is seeking a fire inspector. They asked for this last year. Right now, the fire inspector duties are being performed by the assistant chief. In a perfect system, the assistant chief would be able to focus simply on recruitment, training, and administration. But given our financial situation, we don't, in my opinion, have the luxury to hire a new one right now. Just diving real quick into the middle school debt, in case anyone missed this in the beginning, that is our exempt debt. Again, exempt debt is the debt service payments that are outside of our general fund. Those are the things that you vote on at town meeting and at a ballot. It's billed to taxpayers on top of the 2.5% tax levy, and that's why it requires a vote of town meeting and then the election. In fiscal 25, we were paying debt service on 3 exempt items, the roof, the boiler, and the middle school. But in fiscal year 26, all of the exempt debt, obviously with the exception of the middle school, is falling off. So now we're only going to be paying exempt debt service on the middle school. Our total debt service payment for fiscal year 26 on the middle school is $2.9 million. That includes interest and principal. Right off the top, we'll take the $1 million off that the town is reallocating from taxpayers' money within the levy, and the amount that will be billed on top of your taxes is 1.97. For reference, in fiscal year 25, that was 1.83. Again, that included the elementary school roof and the boiler. So this is just a slide. I know we've talked a lot about that million, so I thought this slide was important to demonstrate that the payment due is 2.9. The town is meeting its $1 million contribution from those 2 sources, and what residents will see on their tax bill, again on top of the regular tax bill, is 1.97 million. All right, so again, for the scenario that I'm presenting tonight, we're assuming the $800,000 in new growth. So at your next meeting, I may tell you that I couldn't convince the assessor to do that, and we had to drop it by $50,000. But for now, we're going to assume that she agrees with me, and we're at $800,000. The unappropriated funds at the bottom is the difference between the revenue I expect that we're going to have and the budget that I'm proposing. In a great year, like last year, we would end with that balance being $350,000 or so. That gives us a very comfortable cushion in case something unexpected happened in the year and we needed a mid-year appropriation at town meeting, say like in October when we asked for additional funding to fund those collective bargaining agreements. $350 is lovely. I'll settle for $150 to $300. In fiscal 24, we closed it with only $50,000. It works, it's a balanced budget, and in all reality, our revenue will come in higher, so it will be different, but it makes me very nervous about any of these unanticipated items that may come up. So my goal is going to be to get us to somewhere between 2 and 300. I know we won't be at 350 just given the nature of the budget cycle this year, but I will feel very, very comfortable if we're over 100. That 49.98, that does not include any of the new positions that I previously talked about. Again, we asked departments to put those separately so that we know what the bottom line is to meet our existing service, and then if we're able to fund new positions, we would throw it in at the end.
So how are you gonna get there? If your revenue kinda locked at the 49.9, let's just say that.
Yep.
It's just gonna come from reducing the request, but,
Correct.
okay, and those are level funded budgets.
Correct. One of the things, and I don't know if it's on a future slide here, but it is on the select board's presentation for Monday. So that you bring up a good point.
I just
Earl.
wonder how you get
Our
there.
problem is that we have a very lean budget, and that's a good thing, but it's also a problem because in a year where you've got to tighten things in, there's really not anywhere to tighten. If you look at what I present on Monday as our first pass budget, most of those increases are settled labor contracts. So the only way to reduce that is by laying people off. And if you look at our departments, there's really no department where I can say today that I can lay someone off and we'll continue to operate the way that residents expect. Most of our departments, specifically in this building, are one-person departments. The ones that are two are one full-time and one part-time. So that makes it a challenge. One of the things that gives us a little bit of a cushion is that we have steadily over the last few years increased the general fund contribution to our roads program. So last year's budget included $300,000 from the general fund to support the work we do on roads. At the same time, we started to realize the revenue from the Fair Share Amendment, otherwise known as the millionaire's tax. That's been generating close to $300,000 in money that we saw for the first time in fiscal '25 from taxpayers, but collected through state taxes. The state gives it to us directly. A portion of it is for education, and then that $300,000 is our allocation from transportation.
And that's not in your 49.
And that's not in there.
Got it.
The other piece that helps us is that town meeting, at the advice of the finance committee and the select board 3 years ago, dedicated 75% of the marijuana revenue to a road stabilization fund. So that's all money that's being paid through excise tax at right now Nature's Remedy, but soon also Yellow House, and it's going directly into a fund that can only be used on roads. So we've generally appropriated $800,000 from that stabilization fund, again, outside of the slides you're seeing tonight. But the revenue has surpassed that, so we could increase that by, say, $100,000 or $200,000, which results in which results in no impact on the work that we have planned. It just kind of allows us to shift the money around. So to make the budget work, we would start with the only place where there's, I wouldn't say excess because we've been able to touch a lot of roads with it, but the only place where residents wouldn't experience a reduction in services, and that's the road money. But this scenario assumes some worst case scenarios. Like, it assumes that our health insurance will land at 10% over last year. I'm pretty comfortable that it will land closer to 6.5, 7. And if it does that, that's going to change the dynamic here a little bit as well. The property insurance is, I'm less comfortable that it's going to shake out. On one hand, we're budgeting for a 10% increase, which is not really where we normally land, but you've got to remember that this will be the first year that we're insuring an $84 million middle school, as opposed to, I think the value of the other one for our insurance was maybe $10 million. So there's a big difference there, so obviously our insurance will go up. So any savings we see in the increase is likely going to be eaten away by the fact that we're now insuring an $84 million brand new building, which up until July 1 has been insured through the project on the part of the contractor. So it's not been included in the operating budget. And the Greater Lowell Tech assessment, one of the great things about Tyngsborough is that once students are in the Tyngsborough Public Schools, they generally stay there. So while places like Drake saw, I think, like a 23% increase in their assessment last year because that many students left Drake Public Schools to go to the Vogue, ours is generally in the 1.5% to 2% range. So we're not talking big money, but I think that will shake down a little bit as well. And we talked about the cushion. This budget does reduce. So last year we funded $300,000 to roads. The budget scenario that we've been playing with funds only $250,000. But again, our DPW and the select board are well aware that should we need to cut something from what is already a lean budget, we would start with the roads and offset it with some of those other funding sources that are outside of the levy limit. Is that the last slide? That's the last slide. That's all I got.
That's all you got?
So on Monday at the select board's meeting, I'll present two scenarios. One is a worst case, one is a best case. Again, we don't have the luxury of being able to lay people off, so that's not on the table. You know, I think of the new requests, one of the things that will likely make my recommended budget is a shared public safety administrative assistant. The fire department has in their budget about $26,000 for a part-time admin. For an additional $25,000, we could make that a full-time position supporting the records functions at the police department and the functions that the fire department has. So we found some creative ways to address that. The other new positions, unfortunately, will likely not be included in the budget this year. But again, not including those will not result in a decrease in service to residents. It won't open us up to legal liability. It is the nature of budgeting. Now, I think there's some positive things on the horizon. If the project that town meeting changed zoning for to construct a continuing care and independent living campus, if that goes through the process, and as far as I know, they're still working to prepare to submit an application to the planning board, you're talking about some substantial new growth there once it's finished. The problem is, there's sewer capacity issues, they're relying on being able to connect to sewer that's being constructed by the warehouses across the street. They don't have a tenant yet, so there's some timing issues. But should those two go forward, and I know they will, it's just a matter of when, you're talking about adding some real new growth that will provide the flexibility to perhaps fund one or more of these new staffing positions.
Hey Colin, is that property insurance included in the total request right now, the 49.9? It is. How
Yeah.
big of a change was that from year to year, from fiscal 24, fiscal 25 to 26 now?
Last year, our property insurance only went up 4.5%.
But raw dollars, and you know what the raw dollar number is on that?
I don't know off the top of my head.
Okay.
The other thing I will say is we don't know what the change will be due to the new middle school yet.
Yeah.
They haven't assessed that. So I expect that, we're assuming 10%, which we assume every year. If it was a normal year, I think it probably would go up 4.5, 5.
Oh, so you took 10 of prior year, okay, prior
Yes.
year, just 10% increase, got it.
Correct.
Okay, that's what you
Correct.
did.
Yeah,
Okay.
But again, I think that new middle school being $84 million is going to
Yeah.
probably,
It's 10 enough, right?
yeah, probably change that.
Okay.
Other questions, concerns? I think the takeaway message is that we can balance the budget and meet the obligation to fund $1 million of the middle school debt, and we have some options.
I think great high-level summary for being, here we are, January 1 here, right? We're halfway, and you already, I think got a good jump on it, so, great job.
Thank you.
Yeah.
All I got.
And the departments are aware that we're being extremely lean on the capital assets, the capital additions, right?
Yes.
So it's not gonna come as any surprise when you tell various departments that we're gonna have to wait.
Correct.
Okay.
Yeah.
I think the 3 years of ARPA funding and the fund spending is over.
Yeah.
And I don't want people to think that we use the 3.7 as a slush fund. We chipped away things that we were going to need eventually, and it's all taxpayer money, but we didn't have to do it by raising the residential tax bill. So it was beneficial, but you're right, now that that's gone, we have to be far, far more intentional.
Okay. So, I think we can,
Motion to adjourn?
yeah, second?
I second.
Okay, all in favor of adjourning?
Aye.
Aye.
We're adjourned.
Hang up.
Hold on, you're still being recorded until